Hey everyone, welcome back to the channel, your number one source for income-oriented investing. And today we will review a very important income-oriented covered call ETF that came out about 3 months ago on the US stock market, IVVW. That's right, Blackrock is getting in the covered call game. So guys, gone are the days, right, where in terms of S&P 500 covered call ETF, you only have two choices, right? A couple of years ago, XYLD from Global X, and then you have JEPI from JP Morgan. So in the last year, 1 to 2 years, guys, the S&P 500 and really the covered call space has exploded on the US stock market. So BlackRock is now in the game. Let's review IVVW. The stock symbol will probably ring a bell because IVV is the iShares or BlackRock's S&P 500 index ETF, right? VOO is the Vanguard one, IVV is BlackRock, and the SPY is from Spider. So those are the three very, very popular index or growth S&P 500. So this is simply IVVW for buy right. When you see buy right, it just means covered call. So this is the iShares S&P 500 covered call ETF, guys. IVVW, I repeat, this is a US listed fund. Let's see what this ETF is all about. It's a very, very clear cut and easy covered call ETF to understand. So first thing that stood out to me right away, just like the title of my video, guys, this is by far the lowest fee covered call ETF in America. The lowest fee one before this one was really JEPI at 35 MER, 35 basis points. This is a lot lower at 25 basis points. So this is by far one of the most positive and interesting things about this ETF, by the way. Very, very, very low management fee. Does not surprise me at all. It's BlackRock, right? They're the most powerful asset manager. So of course they're going to have the ability to have a really low management fee. So that's compared to, again, 35 basis points from JEPI. And yes, there is the Goldman Sachs one, which right now their website is busted. They have a 29 basis point management fee, but that is a promotional fee. It's actually going to go back to match JEPI's fee, I think, at the end of the year. So by far, IVVW, guys, the BlackRock S&P 500 covered call ETF, lowest fee. That's very, very important. So I'm not going to go really through this. This is, typical covered call ETF language. You're basically doing covered calls. And if we just look at the holdings, you'll understand everything right away. This ETF literally holds their own S&P 500 ETF, IVV, and they're writing covered calls on it. Here's the covered call right here. SPX is the S&P 500 index. You actually see the covered call here that expires on June 24th. Is it June 24th or is it June of 2024? I'm not sure. Let's just say I think it's June 24th. You actually have the strike price here of 53.60 of the option here. It's still broken. Anyway, going back. So very simple, guys. You have the IVV S&P 500, which is pretty much 100% of the fund. You have this thing here, which is essentially just cash or short-term treasuries and cash. This is just so they could write the call, and then you have the actual call itself. Very, very, very simple ETF to understand, guys. You're essentially investing in the S&P 500 with a monthly covered call strategy. So the $1 million question is, what is the actual covered call strategy? You don't really see it in any of the description, but if you look at the index, this is the key here. If you look at the index that this ETF is following, you get your answer, or we get our answer. It's the S&P 500 enhanced 1% out of the money. OTM means out of the money, right? Calls on the index. So there you go, guys. This is pretty much a set in stone rinse and repeat strategy where every month they are writing a covered call. Looks like on the whole portfolio, but it's going to be 1% out of the money. So what exactly does that mean? Well, let's go through the actual example right here, guys, and you'll see exactly what I'm talking about. We'll do the math together. So if we look at the latest call option here, which let's say expires June the 24th, it's at 53.60, right? So remember that, 53.60. If you just Google SPX, guys, just Google SPX, you get the S&P 500. And let's say this is a monthly call. So let's say they wrote it approximately in May, end of May, right? May 24, 25, 26. If we look at what the SPX was on May, let's just say May 28th, May 26th or May 28th, so 53.06 or 53.04. That's approximately when they wrote the call 1% out of the money. So if we just do 53.06, which was what the SPX was a month ago, plus 1%, we will get 53.59. This literally matches up almost on the dot. 53.60 pretty much matches up on the dot of 1% out of the money. So essentially, this ETF is writing an out of the money call of 1%. So you're capping your upside every single month, starting at the time they're writing the call, plus 1%. So you're capturing essentially, you could say, 1% upside every month, reset every 30 days of the S&P 500. So this is pretty, it's 1% out of the money. It's not at the money, but it's very, very close. And the yields don't lie. This simply means that this is going to have very high yield, because the closer to the money you're writing the call, or the more it is closer at the money, the bigger the monthly premium is. So here's the last three distributions: 66 cents a month, 62 cents. And in June, it's a lot lower at 40 cents, but it doesn't really surprise me because May was a very good month. Volatility was very low. So of course, remember guys, these monthly distributions are going to vary based on volatility. The more volatile the S&P 500 is, aka the higher the VIX is, the higher the premium, and the opposite is true as well. So of course, the June payout, which is probably reflects May, the May month, is going to be lower, but still, you're still looking at about 10% yield based on the last distribution, and about 16% yield, guys, based on the first two distributions. So this is going to be a very high yielding ETF. You will have to expect varying monthly distributions based on the VIX, based on volatility. It really reminds me a lot of XYLD, because it seems to be a rinse and repeat set in stone strategy. XYLD strategy is an at the money call every single month, and this one is 1% out of the money. So it's very, very similar. And obviously the big thing is the management fees, less than half with the Blackrock one. And I just wanted to show you this real quick. If we actually look, even for XYLD in May, the premium was a lot lower, and in March and April, it was a lot higher. So this kind of corroborates my theory on why the latest distribution is a lot lower. It's because volatility is lower. So guys, I think this is going to be a really important covered call ETF to keep our eye on. By far, there's some really good advantages I see with this one. By far, number one is the low management fee. That is fantastic for total returns long term. It is very, very high yield as well, because it's 1% out of the money. Another advantage is you know exactly what they're doing every single month. There's no surprises. It's a set in stone, rinse and repeat approach. So this, to me, is if you want a low fee, the lowest fee, but you do want high yield, and you're okay to give up most of the upside or a lot of the upside of the S&P 500, but not all of it, right? It's definitely not as aggressive as XYLD. It's 1% less aggressive, you could say, right? But what I really don't like about the XYLD one is, although the premiums are very high every month because they're doing an out of the money call, they're not giving out all the income, right? Orange is what the premium is, but the little black dot is how much they're actually giving out. The rest gets reinvested in the fund. So to me, just analyzing the big payouts, it looks like they're definitely not keeping anything in the fund or reinvesting a portion of the dividend. They're giving it all out to the shareholders, which is my preference. Give it all to me and let me decide if I want to spend it, if I want to reinvest all of it, if I want to drip it, if I want to reinvest half of it, etc., etc. I love the freedom. So definitely an ETF to keep your eye on, guys. This is actually the S&P 500 index, by the way, unlike JEPI, which is just stocks in the S&P 500. And they did come out with also a Russell 2000 one. I know you guys are going to ask me about this one. I'll probably do another video to talk about all the Russell 2000 covered call ETFs, but it's extremely similar to IVVW, guys. The only difference is the management fee is a lot higher, but it's actually the smallest Russell 2000 covered call ETF management fee. So the lowest management fee in terms of Russell 2000 covered call ETFs, right? Much lower than RYLD and the other ones as well. The only difference between this and IVVW is, of course, they're doing it on the Russell 2000 index, not the S&P 500 index. You see here, same strategy. You have the call here, the Russell call, you have the cash and the treasuries just to be able to have the assets to do the call, and it will hold the iShares Russell 2000 ETF. So it's the same thing on the different index, and it's 2% out of the money. That's the other major difference. So IVVW is 1% out of the money. This one's 2% out of the money. So you're capturing a little bit more upside of the Russell 2000 than with the IVVW ETF. But you guys know, I mentioned this before. I always prefer the big cap indexes like the NASDAQ and the S&P over the Russell 2000. But hey, just figure I should mention it because they also came out with the Russell 2000 one. As far as I know, no NASDAQ 100 one, but there you go, guys. So that's, in conclusion, definitely keep your eye on this one, guys. I think this one could be really interesting for income investors who want high yield, who want that really trusted Blackrock name, lowest fee covered call ETF. And it's a rinse and repeat strategy where you're giving up a lot of the S&P 500 upside, but not all of it. You're capturing 1% reset every month. So make sure to put this on your watch list, and see you next time. Hey, don't go yet. A few reminders before you leave. Did you know that I launched a YouTube loyalty membership program where for only $3 a month, you could become a PII Inner Circle member, where you will gain access to exclusive content, exclusive videos and live streams, as well as other perks and benefits, including a really cool weekly opportunity report. That's right. If you're interested, just click on the little join button next to the subscribe button to see what it's all about. Also, make sure to follow me on Blossom and download Blossom. It's a social investing app, which is really cool. You could share your portfolio, follow other people's portfolios, including my own. My username is Adrian_PII. So download it with the referral link below. Not only is it free, but you could actually earn cash by taking these really small, quick 1-minute courses. Really awesome. It's a no-brainer. Also, make sure to visit our website, passiveincomeinvesting.ca. That's where you could book a one-on-one private coaching session with yours truly, with myself, where you could ask me all the questions you want. All the information and booking information is on the website. Make sure to check out that video on the homepage there to see how to book a one-on-one properly. Also on my website, you could purchase my digital product, which I'm very proud of, the ultimate DIY investing package. This is a reference tool or a companion tool that will help you build your own portfolio. So it has lists of funds, it has sample portfolios, and it covers both the Canadian and U.S. stock markets. And the good news is you'll only ever have to buy it once, because it comes with free lifetime updates. And my plan is really to update the version every single year. So make sure to pick it up. Also, I have Questrade and PASSIV referral links below. So Questrade is the broker that I personally use, and PASSIV is the broker companion tool or assistant that I use. Really cool program, really cool software. So I have referral links for both of those. Questrade, $50 of free trades. And PASSIV, I have half off for the elite membership. If you're interested in the elite membership, and even if you want to start out with the free membership and upgrade to the elite afterwards, use my referral code so you could still get that 50% off. And don't forget that the elite membership of PASSIV is 100% free if you use Questrade. For social media, we have a very successful and big Facebook group, private Facebook group with over 14,000 members, where we all try to help each other out. So make sure to join that group. Information is below. We also have Instagram, where you could follow us, or more personal stuff when it comes to our life here in Panama. And there's LinkedIn as well. So as usual, everyone, how do I leave you? Continue to stay safe, stay healthy, and of course, stay passive. See you next time.